Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 29th of November, 2023. This is episode number 2580. We're 20 episodes away from 2600, but it does not look like we'll make it unless we do 2 episodes a day before the end of the year. So, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's take a look at our convergent trading pre-market summary sheet. Hopefully some of you jumped on the deal for Cyber Monday and Black Friday for convergent. So we have risk on sentiment. Risk on sentiment this morning, you could see it's pretty much green across the board there for the indices, basically the risk instrument. The DAX leading the pack today. The DAX up 1.04%. Couple things that are pushing this around. Is the sound low? Really? I'm showing it hitting the full meter there. So a couple things. Fed's Waller's comments yesterday were very bullish, very dovish. He used strong language to reflect a notable shift in guidance from the Fed, and that the Fed will have to cut rates to manage the real rate. They don't want the real rate to keep climbing. So the market anticipated that already, and again, they've priced it. If you look at the Fed Watch tool on CME, you'll see that the Fed funds rate's already pricing in a high probability of a May cut. So we'll see how that goes. The big news, though, today, and the reason the DAX is much higher is because the German CPI, prelim CPI numbers were really markedly cooling versus prior. Same for Australia and Spain. The market's responding with risk on to this kind of news, right? So this is what's driving things. Kind of a perfect storm for equities. Good earnings, okay guidance, and on top of that, interest rates look like they've capped out, and it looks like the duration may be known, and so it's time to put some cash to work. And that's what we have here. The only other X factor here is OPEC Plus tomorrow. They've talked about delaying this meeting once more, but it looks like it's going to go forward, and the market's already pricing it and expecting some sort of action on supply. Saudi Arabia is pushing OPEC members to cut supplies, to agree to cut supplies, and to hold those numbers. CL's already popping 1%. So yesterday, CL also pushed higher. Gold was the big one yesterday. Gold had an open drive right off the open and ended up breaching and getting above, I think, April-May prices. Note that gold, silver, and copper have all rolled. Silver and copper to March, gold's in February. So if you're trading those products, make sure you're trading the right month. As far as what's on the calendar, we had, let's see, there was some. So this morning we had the GDP growth rate Q on Q came in stronger than expected, 5.2% versus 5% expected. The prior on this is 2.1%. Corporate GDP price index also jumped up 3.5% versus the prior 1.7%, but came in line with expectations. We had retail inventories. We had wholesale inventories. Wholesale inventories came in at negative 0.2 versus plus 0.1. And what we're left with here today is the EIA crude and gasoline inventories. We're looking for Fed's Mester at 145. Industrial production out of Japan this evening at 650. Retail sales as well. Australia's building permits and housing credit at 7:30 p.m. interest rate decision by the South Korean Central Bank at 8. And then China is releasing the MBS manufacturing PMI at 8:30 and non-manufacturing PMI, but the manufacturing PMI is the one that's most important. And then we wrap up the day also at 8:30 with Japan's Bank of Japan's Nakamura speech. I will not be here for that. So that's what's on deck for today. So Fed's Mester, keep an eye out for that. And of course, there could be a surprise here and there. More speakers than what's on the calendar here. So we do get Fed's Beige Book, by the way, at 2 p.m., but it's considered a low-tier figure. Another thing that's pushing things along is yields. Look at the run-up in the 10-year futures, 10-year yield taking a beating yesterday again. This is supportive. 10-year is the kind of benchmark for a lot of businesses, and as the futures push up with a coupon rate remaining steady, it means the yield goes down. So futures up, yields down, futures down, yield up, and the yields have been pushing lower as the futures have been pushing higher. So this is another factor in the equation here that's supportive. The S&P is in another multi-distribution profile. Pretty active price discovery in the overnight session. Multiple high-volume node and small low-volume nodes. So we have like a triple distribution there. Volume's really good today for a change. Thank God. It's been like 2 weeks since the Fed meeting. It's been just dry. The volume's been off like 30%. Today, the volume's in line, 235,000. The inventory is 99% long, and the point of control shifted up slightly from yesterday, 45.69. If you recall, yesterday was around 45.55. And then we have 27.75 or 28 points of range. We've been recently anywhere between 12 and 16 points. Yesterday, we had about 17.5 points of range in the overnight session. What does this tell us? It is the overnight session. It just tells us what mood the market is in. Okay? Charlie Munger passed away yesterday at 99 years old. This is the guy who started everything with Warren Buffett. He's considered a genius investor along with Warren Buffett. He's gone. Lots and lots of videos of him giving sage advice. May he rest in peace. And let's move on to what we've done. So here's the expectation of yesterday. These are the moves that were expected yesterday. This is what we ran through. The primary scenario, because I'm reading the day-to-day auction as having turned over. So this is from yesterday's video. I'm reading the auction as having turned over. I can see that value shifting lower. I can see the point of control shifting lower for volume. And it's having a hard time holding on to higher prices because it's leaving excess highs. And so my primary scenario is in line with that. And the expectation is we would likely push from where we're opening 52 to 55, 56. And the expectation is it's likely to struggle to hold on to yesterday's range, impulse down, and then start taking us down to 50. And then consolidate at 50. That's shown right here. And then make a run for 36, 37. That was the primary scenario, given all of the information to the left. The secondary scenario is we go sideways, then we break into the range, consolidate, break into the range, use the range low as a base, use the consolidation as a base, and then very likely run to the prior settle, and then immediately make a run for the 64, 65. Scenario 2 is basically what played out yesterday. Let's take a look at that. Here it is, right? So this is the prior session. This is the session we're comparing it to. And this is our session, our day session right here. And you can see that, we open in an open auction. We went to the prior low. We consolidated there. And then we broke out, but the breakout didn't see a pullback. like we outline here, right? So we push against prior low. So this is the breakout that we saw yesterday. The initial balance was done. We did not get this. We did not get that. The market was not kind enough to give us that. We had the consolidation below the open, below the prior low, and then it just, boom, breaks out. Single prints, has a pretty shallow pullback. It does go to the prior settlement. It goes to the prior settlement and holds steady there for a minute. Just trading both sides. And then it just continues on and moves to 76, 77 and a quarter. And then, this is powered by Fed's Waller. And then there was another Fed speaker behind him. I forget who. And the market responded to that news to the downside. I saw this as a pullback to the DGPs here. I saw pretty good confluence for a long here, but it just could not muster up any good buying, and it had to flatten that position and watch it fall right back out of the prior day's range. This is the prior day's range. Fall right back out of the prior day's range, and then it's just garbage from that point onwards. From about 12 o'clock or 12:15 Central, for the rest of the session, there was nothing. Now, since then, so we settle at 63. If you recall, that's our main target, this high volume node. So we settled right here at 63. All right, so still kind of playing scenario 2 there, or having accomplished scenario 2's target. We basically have not looked back at the prior we've not looked at prices below the prior close, and what we have now is this very, very active discovery profile. That profile is very jagged, very active discovery on pretty heavy volume. We have pretty good separation from VWAP and mid. We have pretty good separation from the overnight point of control, though the overnight point of control is only a few hundred contracts away from being shifted to the top. And we have a weak high at the top in the overnight session. So the expectation on the overnight session is that it's very likely to pull back a little bit, maybe to VWAP. VWAP likely to travel a lot quicker up here. And I want to see the reaction at VWAP before we start pushing for the long side. The target, the biggest target that I outlined, last Monday, Tuesday, Wednesday, the targets were 76, 85, and 95, I think. Those were the three spots we expected the market to test last week. It didn't. It was a short week. And so we have this 95 left, and then we're at the 4,600 century figure, which is well within reach. It's 26 points of 14 to 16 points away, well within the day's range, as long as it doesn't sell off. So this morning, the expectation is it's very likely to close this separation between VWAP and where the price action is, hold sideways, and then squeeze towards the 95, consolidate at the 95, and then ultimately test the 4,600 and push through the 4,600. What do we have above 4,600? We have 4,610 and 4,621. 4,621 is the bottom of the 8-2 gap. This was the gap that we left behind when we started running to the downside, and that's our primary target. If you notice, the targets are in the 20s a lot. 45.24 was our MC point of control below, and that was the key target if we had broken lower through the 36.37. 46.21. We had a 44.20 as another MC point of control. There's something about 20 that this product really likes. But that the 46.21-ish, 20-ish is the bottom of the gap zone left behind from August. And that's our main target. And from where we are now, that represents less than 40 points, well within range, but with a pullback, it might get out of range just a hair. But that would be considered the extended target. So today, overnight high, 95, 4600, and then 10, 4610, and then it goes to 4621. That's the price map going higher. That's your first scenario. The second scenario, let me just change colors just so that it's not so confusing to look at. The second scenario, open auction out of range, attempts to push higher, consolidates, then starts to break lower, starts to move back towards closing the gap, gets into the 77 or so, and then squeezes lower towards that 71, and then 71 may provide a base for it to just consolidate here. So we end up with a higher high, higher low, but an overall downward kind of trade for the day. We're already, we've already pushed up quite a bit, right? So here's what that looks like. So you can see this is where we are now. We've cleared the prior weekly high, so it's bullish. So the primary scenario is really going to look for a market that pulls back and finds support. So this morning, will it do what I say? It doesn't. It doesn't give two craps about what I say. The market is the market. It's much bigger than any one of us. But what's important is that I know that although it might break to the downside, all indications are, because we're in the excess of last week, we're above last week's high. We have a 99% inventory, and the overnight session has been buying. That I want to take it easy on the short side. And I want to take it easy on the short side until it gets down into the prior day's range. And then, even then, I'm not going to get short because I'm going to look for it to get into the prior day's range and then fail to get out of the prior day's range to continue. Then it becomes a short, looking for yesterday's settlement at 63. That brings us back to the MC point of control, 63, 65. And if it's not able to hold that, then we're looking for the point of control below at 57, 58. But until then, I can't be one of these guys that's like, well, it's got to go down because it's gone up. Like, that's just not a plan. It's wish. It's a wish. It's not a plan. So overall, the first thing I'm going to do is look for and measure as best as I can what the pullback to VWAP and to the prior high is going to be. VWAP, mid, and the prior high are currently in confluence. The VWAP, the mid, are at 76, 50, 77. Prior high is at 77 and a quarter. That's going to be the benchmark. That fills the gap. It cleans up the gap area, and a very likely place for the market to pull back to base, to really make a run for the overnight high, 95, 4600, 4610, 4620, 21. Okay, that's the key scenario. The secondary, of course, is it falls through, just like I said, unable to find support at VWAP mid, full session VWAP, full session mid. In that case, I'm going to be monitoring how it's treating RTH VWAP, RTH mid, especially RTH VWAP, to see if that closes the door on sellers. And if it breaks into the prior day's range, I want to see, does it come out easily or does it have a hard time coming out? Because yesterday we left an excess high right here. We left an excess high because we came up and sold right off. And if we get back in here and as it tries to pull back, it has a hard time, then that's when the short setup becomes apparent, looking for 65, 64, 63 prior settlement, and then back to the point of control from the prior session and consolidate. This is actually balanced. Okay, so balance in here. So if it does get back into the prior settle, it's very likely, high probability, historical probability of attaining the prior point of control, and that becomes a key target. You see, That's the plan. What it does, how it trades, is unknown to me and everybody else. Nobody knows. Everybody throws levels, and then they highlight when those levels are hit. And I told you so last week, and this is the level, and look at how perfect it worked out. But look at the number of times it didn't. In other words, nobody knows what the market is going to do. But the idea is to come in with an understanding of what is the strength, what is your strength, which side should you lean on, which side should you be suspicious of. That keeps you off of the garbage trades and the errors. You eliminate your errors. I've talked about this for years, for more than a decade now. The key difference between my traders who made it big as prop traders and those who struggled a lot until they figured it out, took longer, year plus, as prop traders, usually we cut people off at 1 year, is the guys who did really well, internalized and understood the cost of errors and the importance of managing errors. And coming in with a plan is a good way to measure and manage your errors. Okay? So I just want to leave you with that. NQ, same sort of thing. NQ, though, has run quite a bit already. So we've seen that the NQ has had a really hard time on the bid side. It's already kind of done its work. It had this massive excess high that it left behind into the 73.50. And instead of gapping up, the NQ is actually in that excess. So it'll be very interesting to watch what the NQ does at the bottom of the excess, right in here against the 16,100, basically. Does it hold or does it not? If it holds, it may be in confluence with the S&P, and that gives us the opportunity to push the 173.50 and start squeezing higher as well. But the NASDAQ on a relative basis, just for the last couple of days, has been weaker than the ES. Crude. Looking at crude, lots of long profiles in crude, lots of volatility in crude, but overall it's been in this kind of triangle. And then yesterday it broke out and closed above, shifting the point of control higher. Incomplete auction yesterday on the close. It had an incomplete auction that it's now completing the overnight session. The equilibrium point right now for this area is $76, and it's trading at 77.25. Crude wants to break to the upside. Remember, Nirvana is at 80 and then 82 for crude. That's the magic number that it has liked, and that's probably where OPEC wants it. So we'll see what happens. Crude has big news ahead tomorrow, and probably a lot of today. You're going to get news feed type stuff from the various OPEC members that are likely to influence what crude does. But it's got a lot of range, and it's actually a pretty decent day trade right now. I highly recommend that if you're going to get into crude, please trade the MCL contract. MCL. They're in January. They're in the January expiration. And so trade the MCL. Do not trade the CL, because the MCL is financially settled versus the CL is physically settled, and it's a lot bigger. And if you're experimenting, you have no business being in a big product when the little product has ample liquidity and volume. Okay? Good luck. Hit the like button. Make sure you subscribe to the channel. If you're not subscribed already, there's a link at the top of the chat box for you to subscribe, or go to ft71.com/YouTube. Let your friends know about it. Take care.